friends. Last couple of videos I published didn't really have, or didn't actually have at all, any commentary from me. I thought it was needless to have any because a lot of these speak for themselves, but I will make a few comments, and let's see why this is ongoing. Before I share very telling clips from mainstream media, nevertheless, that are pretty good at reporting some of the mainstream facts that are available in the public. But before we do that, mortgage rates jump again and remain above 6%. This is in the United States. We know that what happened in the United States with the property didn't necessarily translate in Australia or other Commonwealth-ish countries like Australia and Canada. But let's see what the current state of affairs is in the United States, because we know that that's where most things originate, and as a ripple effect, it spreads out to the rest of the world.
How would you describe the state of the housing market right now?
Well, it's great to be here. So there's a demand and a supply side to this story. Clearly on the demand side, buyers have pulled back from the market as affordability has quickly deteriorated and mortgage rates have hit above 6%. On the supply side, you can't buy what's not for sale, and sellers are sitting tight right now because they're locked into these historically low mortgage rates and they don't have a financial incentive to move. And so we're finding that sellers aren't selling, buyers have pulled back, and that's resulting in housing market that's cooling quite a bit.
So housing market is cooling quite a bit. So the sellers, so unless anyone's selling it, there won't be any buyers. But sellers are not selling. Why they're not selling? Because they've been given these crazy honeymoon rates that are still very low. They've been locked in for them, so they're not selling. Nobody then subsequently can buy. But I'd rather think that if they were selling and asking for some of the prices that they got it for, they wouldn't have got those prices. So the sales wouldn't happen either way. They are currently not happening, which is why this lady that has an interesting book up there saying that, yeah, the property market is quite subdued. But let's head over to down under to Australia and see what is going on down here. It sounds a little bit more serious for a change in Australia, where we know the property market never goes down.
Sydney property prices continue to fall as interest rates continue to rise. Experts say it's the sharpest market correction in history, but it's not evenly spread, with suburbs in the southwest and west defying the trend.
What went up is quickly coming down. Sydney house prices, once booming, now busting.
We are seeing housing values falling quite rapidly. In fact, the fastest we've seen on record, particularly here in Sydney.
As it hikes interest rates, the Reserve Bank warns house prices nationally could fall at least 15%.
It was always going to be the case that there would be something of a correction. Maybe this one will be a bit stronger.
In Sydney, from the peak of their markets, the Northern Beaches has the sharpest declines, down almost 14%. The eastern suburbs slipped almost 11%. City, Inner South and Ryde also big falls.
The more expensive end of the marketplace recording a faster decline in housing values.
The least pain felt in Blacktown, the outer southwest and southwest. But in recent years, it's hardly all gloom for Sydney real estate. An upswing peaking in January saw prices rise by almost 28%. Since then, the average price fall across Sydney, 7.4%.
I can't see the market eroding away those 20 and 30% gains.
Falling Australian house prices hasn't stopped sellers from selling across the nation on the weekend. More properties went under the hammer than at the same time last year. And in Sydney auctions,
our clearance rates are at 60%, which is not atrocious.
Chris Marr, 7.
Yeah, okay, so not all that good, not all that bad yet. Let's see the next one.
House prices are on the way down. After an all-time high in January, the market is experiencing one of the biggest corrections ever. But it's not all bad news. Some pockets in the southwest and west are defying the trend. Chris Marr has more.
Well, the Reserve Bank is indicating just how deeply interest rate hikes will bite into recent gains in house prices. Now, the Reserve Bank says it now expects house prices to slump at least 15% nationally. The latest data shows prices are down 7.5% in Sydney, but that's still well short of the gains made in the market up to January this year, when prices rose nearly 28% across Sydney. And the data also shows the price falls varying across Sydney, with more expensive parts of the market falling nearly 14% from their peak. Affordable areas like the southwest have fallen closer to 3%.
Well, at the moment, we are seeing housing values falling quite rapidly. In fact, the fastest we've seen on record, particularly here in Sydney. But also, we're in a marketplace where interest rates are rising at the fastest pace since the early 1990s.
It comes with forecasts now firming behind another interest rate hike of 0.5% when the Reserve meets next month. The RBA says the average mortgage holder's repayments will increase by 25% due to interest rate increases this year.
All right. Well, something not to be
House prices are on the way down.
ignored is the interest rates rising. As we saw, mortgage rates going over 6% in the US. I'll share that article in the description below. But yeah, I mean, they're rising everywhere. The biggest question is whether the Federal Reserve and here Australian central bank does a bluff, or is it real? What people are talking about is that to cool the demand and the inflation, the Federal Reserve and Reserve Bank of Australia and others central banks around the world are trying to, at least if not raising, well, they are raising rates, we know that, but they're also trying to maybe spook the markets in a sense where just by saying that they're going to raise and follow up with some of the action, that the inflation will cool down without them having to raise the rates even higher. Because if they do, Reserve Bank of Australia actually said that we could see at least around 15% decline. Now, that's not a lot compared to 27% rise in the past year or two. But the problem is that the market, especially property market, hasn't been used to declining at all. So it will be a completely new territory for the confidence, for the people going to buy properties, for people making offers. So it is as little as it sounds compared to the increase we've seen. It's really not going to be a norm, and which is why it'll be interesting to see, and I hate saying, it'll be interesting to see, of course it will be, but the market will find itself in uncharted territory for a long time, because remember what they said? They actually mentioned fastest in of all time. Here it is once again.
Sydney property prices continue to fall as interest rates continue to rise. Experts say it's the sharpest market correction in history, but it's not evenly spread, with suburbs in the southwest.
Sharpest market correction in history. I mean, in history means ever. I mean, I don't know how else to explain it, or what other comments can we put here to express the seriousness of the current decline.